Good evening, I'm Jerry Smith, and welcome to Blink News TV. Tonight's top story: the Reserve Bank of New Zealand might reduce interest rates sooner than previously expected as economic challenges intensify. Over the past year, predictions regarding the timing of the first official cash rate OCR reduction have fluctuated. Initially, forecasts suggested a cut later this year. However, persistent domestic inflation sparked concerns that higher rates might need to be maintained for a longer period. At one point, another rate hike was even predicted. Now, there's growing consensus that the economy is struggling enough for the Reserve Bank to consider a rate cut this year, instead of the previously forecasted August 2025. ASB economists have recently adjusted their outlook, now anticipating a rate cut in November, instead of their previous forecast of February. They noted that household financial stress is increasing under high interest rates and easing, but still high, living costs. They stated, the cracks in households are starting to spread. Inflation will be next. They emphasized that the inflation dynamic is shifting rapidly this year. Households are buckling more noticeably under various pressures of high interest rates and high living cost inflation. To date, the labor market has been a savior, with employment holding up and wage growth relatively stronger. Even that story is starting to change. ASB economists believe the greatest risk now is not cutting rates too soon and seeing inflation rise again, but rather holding interest rates high for too long, which could damage the economy and employment prospects. BNZ economist Stephen Topless echoed this sentiment, citing the latest quarterly survey of business opinion, which screams cut rates sooner rather than later. However, he noted that the Reserve Bank would likely wait until inflation falls within its target band before making a move. Topless pointed out that only 23% of businesses surveyed plan to increase prices, the lowest level since December 2020. This suggests headline inflation could soon fall within the target band. With pricing intentions continuing to drop sharply, ANZ expects the OCR to remain at 5.5% next week, with the Reserve Bank maintaining a cautious watch, wait stance. However, ANZ believes the recent survey data supports interest rate cuts sooner rather than later. Although they still forecast a cut in February, they note the risks are tilting towards earlier, dependent on further data falling below Reserve Bank expectations. Westpac predicts that the Reserve Bank will emphasize risks to consumer spending and inflation from the budget, balanced against a stalling economy and easing labor market. ASB is the latest bank to forecast a rate cut in November, citing easing inflation pressures and households in hibernation as they cut spending to cope with higher interest rates. Senior economist Mark Smith stated, economy-wide inflation pressures should continue to cool, enabling the RBNZ to provide interest rate relief to beleaguered households. Smith expects the RBNZ to want full confidence that inflation is returning to its 1 to 3% target zone before cutting rates. He believes the conditions for rate cuts are becoming more apparent, with the greatest risk now being holding rates too high for too long. Kiwi Bank supports a November rate cut, warning that maintaining higher rates could scar the economy. BNZ considers a cut before the end of the year plausible, though a February move is more likely. Stay tuned to Blink News TV for further updates on this developing story. I'm Jerry Smith. Thank you for joining us, and have a good night.